Hello, everyone. My name is Chris Kapches. I'm the president of Chestnut Park Real Estate, and this is, I guess I'll call it my second post-lockdown market report. I gave a market report for March, and now this one's for April. And rather than sort of spend a lot of time on the numbers, I think most people are aware of the fact the market from a pure sales perspective has plummeted dramatically as a result of the implementation of the lockdown measures. But what I want to talk about, which I think is perhaps more important, is the strength of the market, the resilience of the market, notwithstanding the fact that over 3 million Canadians are unemployed, and almost every business except for the essential services businesses have been closed. Notwithstanding that, the market in April still produced almost 3,000 sales, and granted that is about a third of what would normally happen in the month of April. But having said that, not only did it produce 3,000 sales in the face of all of the impediments to sales, including very restrictive protocols that most brokerages had implemented that made showings difficult. Notwithstanding all of that, a couple of points that should be mentioned. First of all, there were almost 3,000 sales, which is quite an accomplishment under those circumstances. Secondly, the average sale price came in at about $821,000, which is more or less the same as it was last year at this time. If you were in the city of Toronto, it was closer to about $890,000. Again, a testament to the fact that prices have held, notwithstanding everything that transpired during the month of April. And then, in addition to that, the speed at which sales took place. All properties sold across the Greater Toronto Area in 19 days. That's exactly the speed at which properties sold last April, when none of these restrictions, none of the lockdown measures were in place. Again, I think those speak to the strength and the resilience of the Toronto marketplace. Granted, there were some areas that were more dramatically impacted than others. Higher end of the market slowed dramatically. It was off almost 75% compared to April of last year. Understandably so. I mean, with the equity markets taking the beating and the punishment that they have taken, it's not surprising that the upper end of the market would have that negative impact. Secondly, at the other end of the market, we saw condominium apartments. Their average sale price came off in the month of April by about 4%. It's the first time we've seen that in many years. And again, that end of the market represents first-time buyers. A lot of first-time buyers are the victims of the lockdown measure, people that have lost their jobs and are no longer in the marketplace. So not surprising at either end. But overall, the resilience of the market is surprising. And looking at these numbers, one can't help but think of what a tremendous month we would have had we not had the lockdown measures. And looking forward, I think we can anticipate that the market will once again be resurrected in a very strong and powerful way. And on top of that, one of the reasons why I say that is not only did sales drop in the month of April, but the number of new listings coming to market dropped by almost the same amount, approximately 65%, which means that we already had a chronic inventory shortage before March the 15th, when the lockdown measures took effect. And now that inventory shortage is going to become even more chronic than what it was, to the point where it's going to become nightmarish for buyers trying to find properties when the lockdown measures relax and people get into a new normal, but a normal that allows them to get into the house buying and selling process somewhat more like what we were used to in the past. So overall, I still think there's positive data in the information that comes out of the market in April. I think that is going to manifest itself as we go forward. I don't think we're going to see that happen in the month of May. I think May is going to be working its way through with people coming back to work slowly, adjusting to the quote-unquote new normal. But by June, I think you're going to see the market starting to pick up. I think you're going to see prices increase, primarily because of the fact that we're going to have an inventory shortage. And as the year progresses through into the tail end of 2020, I think you'll see a market beginning to resemble the market that was in place pre-March the 15th, when the lockdown measures came into effect and businesses closed, restaurants closed, bars closed, and effectively millions of people were out of work. As those people get back to work and as the economy starts to find its new normal again, I think you'll see these numbers start to improve fairly dramatically, because the resilience of the market is demonstrated in what transpired in the month of April. So until next month's report, which will be May, and I'm really excited and looking forward to doing it, first and foremost, stay safe, stay healthy, follow the emergency guidelines, and I look forward to speaking to all of you a month from now. Thank you, and stay safe.